Et alors, pour reprendre, on va repartir sur une keynote, and I will speak to English to introduce Daisy and George. Daisy and George are working at RMI, so it's the Rocky Mountain Institute. It's a US, an American NGO, and they build the PACTA tool, and so they will explain us some use of this tool, and the presentation will be in English. So yes, Daisy and George, can you come with me?
Well, good afternoon, everyone. On behalf of the RMI team, I thank you for the invitation to participate in the event. Je suis désolée, I don't speak French, so you'll need to bear with me in my English. So my name is Daisy Pacheco. I am here today with my colleague, George Harris, who will be able to stay a little bit longer after the event as I have to run to the airport. But before that, the idea for today is that I will walk you through some of the key insights gained from the implementation of the PACTA methodology in an European context. But before doing that, for those who are not very familiar with RMI, RMI is an independent, non-profit organization of experts that is based in the US, but with offices around the world, a couple of those offices in Asia, also India, Africa, China. And our mission is to transform the global energy system into a secure, clean, prosperous, zero-carbon future for all. George and I are part of the RMI Center for Climate-Aligned Finance. And at the center, we partner with financial institutions around the world, also with climate research institutes, with corporations to achieve real economy transition at the pace that is required to meet the climate objective of 1.5. Our work focuses mainly on three key areas: measurement and reporting, metrics and tools, and transition finance. Some of the work within these areas encompasses building pathways and frameworks for the hardest to abate sectors such as steel, aviation, shipping. Also, we convince diverse stakeholders to secure buy-in and uptake. We author thought leadership on different topics: transition finance, transition plans, most recently also on transition risk management. And we also lead capacity building workshops with a different range of stakeholders in the financial system. PACTA, the Paris Agreement Capital Transition Assessment, which will be the focus of today's keynote, is part of the metrics and tools component of the center. So also just like to explain a little bit of what is PACTA, what it does, the different types of engagements that we have with different financial institutions. So PACTA is a forward-looking portfolio alignment methodology and toolset that combines information from financial portfolios with data from companies, with forward-looking production data from companies, and compares them with climate transition scenarios to assess the degree of alignment. A wide range of financial institutions have used the methodology in response to that increase for the need of forward-looking information and methodologies. So in the case of banks, for example, banks can use the PACTA for Banks open source and toolset to assess the alignment of the corporate lending portfolios with climate objectives. The results from the implementation of the PACTA for Banks methodology allow banks or support banks in strategic decision-making, also in the development of climate-aligned strategies, but also assist them in meeting their disclosure requirements as they communicate on alignment progress, as well as in the identification, measurement, and management of transition risks. Quite a broad range of banks, not only in the European context, but as well in the US, Specifically in Europe, banks such as ING or BBVA have adopted the methodology and use it now regularly in their climate transition assessments. On the institutional investor side, say insurance companies, pension funds, asset managers, they can use the Pacta for Investors web platform to upload the listed equity and corporate bonds portfolios and get interactive results. The metrics that are included or that are embedded into the methodology allow them in portfolio management and also in client investee engagement. Some other of the use cases of the Pacta for Investors tool include the metrics that are being developed at company level, which also allows to assessments like the company benchmark indicators that is consolidated and published by the Climate Action 100+. On the side of governments, Pacta also supports jurisdiction level or better aggregated level assessments of the alignment of the entire financial system through what we call coordinated projects. The implementation of Pacta across financial institutions within one jurisdiction allows for uniform assessment by generating results that are directly comparable within financial institutions. They are unaffected by variations in methodologies, in data sources, in estimating approaches as well. The most recent climate alignment test in Switzerland is an example of this type of project. So in this case, the Federal Office for the Environment has promoted this type of initiative every 2 years, and this year marked the fourth iteration of the exercise. Results are publicly available online in case you want to have a closer look at them. And then lastly, on the supervisory side, which is a little bit also the focus of today, Pacta provides tools to supervisors to identify, manage, and oversee transition risk in financial systems. Some examples, leading financial supervisors and regulators across Europe, North America, also Latin America, have used Pacta metrics to assess the climate alignment of financial institutions that are under their supervision. Some examples include the European Central Bank, the US Treasury's Federal Insurance Office, and the Swedish Financial Supervisory Authority. So before we see some of the results from the implementation of Pacta in the European context, a little bit more of background in terms of what is Pacta and how it works. So the alignment assessment that was carried out by the European Central Bank used Pacta to assess portfolio alignment. And this approach, as I was quickly mentioning before, it compares the projected or the planned changes in the real-world assets that are owned or operated by companies with the changes that are required to meet climate alignment, to meet climate targets. One of the key insights that is gained from the implementation of the methodology is like this assessment of alignment or misalignment. So if a company's adjustments are lower than what is required by these specific pathways, then it is considered misaligned. We'll see a couple of examples of what this means and what it tells us. To do this, Pacta uses or relies on three main components, which are asset-based company data, transition scenarios, and portfolio alignment metrics. So on the asset-based company data, it reflects basically the forward-looking production data of the underlying assets that are owned or operated by companies. It shows when and where additional production capacity will be added or closed down in the real economy. In other terms, if it kind of facilitates information of the phase-out of high-emitting assets, but also on the build-out of new low-carbon assets. On the transition scenarios, also known as sectoral decarbonization pathways, these combine macroeconomic modeling of transitions with expert assumptions about the technology shifts that will need to take place to meet certain climate objectives. Some examples of these type of scenarios include the International Energy Agency or also some other sectoral transition pathways such as the Mission Possible Partnership. Lastly, on the portfolio alignment metrics, So these metrics are the ones who allow us to do the benchmarking of the forward-looking production data with the transition pathways. So we can compare what is the transition, or we can get insights from the transition planning of a portfolio of companies within a given sector. In terms of the sector, the methodology covers 7 key climate sectors: oil and gas, coal mining, power generation, aviation, steel, cement. And the reason to cover these specific sectors are because these are kind of representing more than 75% of global CO2 emissions, which makes them crucial for climate action. Within each sector, there are some specific technologies that are covered in terms of, and it gives us information on the phase-out, build-out, or decarbonization that needs to happen within these sectors. So now, just like looking at some of the key findings from the implementation of the PACTA methodology in the European context, and just to put a little bit into context of the assessment, so the analysis was carried out for the portfolios of 95 euro area banks that represent approximately 75% of euro area lending. And one of the key findings from this assessment is that 90% of these banks are misaligned with climate objectives. Through the implementation of the portfolio alignment approach, it was possible to identify that a major driver of the misalignment was the financing of corporations that are either too slow in phasing out carbon-intensive production or too slow in building out renewable energy capacity. Some of the PACTA insights also allow to identify that the power sector was one of the key drivers of these results. So it was possible to identify that banks were extending credit to corporations that are planning to phase out coal power plants, which is positive on one side. However, the build-out of renewable capacity was too slow compared to what is required by the technology pathways. This imbalance highlights a crucial point in this type of transition risk assessments, and is that transitioning to a low-carbon economy requires not only reducing harmful activities, but also actively investing in sustainable alternatives. So this current lack of both build-out of net zero technologies and phase-out of carbon-intensive technologies increase the chance of a disorderly transition, as shifts will have to occur faster, increasing the transition risks faced by banks. This leads to an increased likelihood of a stronger policy response or new competitors taking over the market. And ignoring this transition risk leads to higher risk of default for certain corporations, and in turn, larger than expected losses for the banks that finance them. The misalignment exposes banks also to elevated credit risk. So corporations that fail to adapt to the low-carbon transition may struggle to remain competitive. They could face a decline in profitability and ultimately an increased risk of default. This in turn translates into potential losses for banks, particularly those that are heavily invested in these sectors. One of the key insights as well of the implementation or this analysis was that it was not just about financial risk, but also reputational and litigation risk. So we all know that public scrutiny of financial institutions' role in climate change is intensifying, and banks' financing activities that hinder the transition are likely to face backlash. But it was not like all from the negative side. There were also some positive results as well from this analysis, specifically on the automotive sector, as electric vehicle production was projected to increase, and borrowers plan a significant uptake in electric vehicle production. So these are just like the representation of what I just walked you through. So these are some of the visuals that show that most of the banks are misaligned. So on the left-hand side, each dot represents one bank. The further the dot from the center line, the further the misaligned. So we can see that the misalignment varies in severity across the banks, which highlights the importance of granular assessments approaches like PACTA. On the right-hand side, we can also identify like the drivers of the misalignment. So PACTA allows us to identify the causes of misalignment, and this is what we are seeing here. So the chart breaks down the net alignment of the build-out, phase-out, and decarbonization technologies, and this is what I was referring to before in terms of the slow build-out and slow phase-out of the different technologies in the assessment. PACTA allows, as we can see, for sectoral and technological analysis as identified in this assessment. Further results also that were, or further kind of types of analysis that were included based on the PACTA methodology. So PACTA provided the basic analysis, but the European Central Bank extended the analysis to provide additional risk perspectives, as we can see. Maybe that is not too clear, but we can see two types of analysis here. One of those related to the maturities of the loans. So the majority of loans were extended, extended in these sectors have relatively short maturities, with 80% maturing within 5 years, which might seem like a positive sign because it was offering banks opportunities to reassess the alignment during loan rollovers. However, we must also consider that the original maturity of these loans was around 7 years. This suggested that banks often engage in longer-term financing relationships with this type of corporations, and simply rolling over the debt over periods without addressing alignment concerns is not sufficient. Another type of analysis is related to like comparison between drawn credit versus drawn credit plus credit lines. So again, here the dots represent banks, and the lines that connect the dots are related to the same bank. So the comparison between the drawn credit and the drawn credit and credit lines. So what we see here is that banks' exposure to the misaligned counterparties could increase over time. And this emphasizes the potential for a substantial escalation of transition risk in case the credit lines are fully drawn upon in the following periods. So this again, this is publicly available in case you want to see want to have a closer look at the results. But I guess just to finish, and I think we're missing one slide. But I guess just like the key takeaways from this assessment are related to two main topics. So the first one is related to the PACTA application in the European banking sector. This is one of the couple of exemplifications of the use of a portfolio alignment methodology. And it is clear to see that by building up this type of analysis of portfolios from the bottom up, based on the underlying assets or the underlying information from counterparties that are part of financial portfolios, the toolset enable a more granular assessment or a more granular measurement of the alignment of the activities of these companies, and this allow for forward-looking assessment of transition risks. We saw some of the implications of the identified misalignment, which are related to transition risk, credit risk, but also reputational and legal risks. And then the final thing, or the final key insights or key message is that this type of analysis, we consider that are the starting point for transition risk management, as it serves as the baseline for the identification of risk, or the identification of risks within portfolios that are stemming from the misalignment. And this also gives information that is required to start thinking about how to measure progress, and then also how to think about what can an effective response from banks may look like. Thanks again for the invitation, and happy to respond to any questions at the end. Thanks.